Good afternoon to all of you, and it's a pleasure to introduce you today the EFRAG Voluntary Reporting Standard for Non-Listed SMEs, which we have just released. What are the key features and objectives of this standard? This standard is not a deliverable of the CSRD, so of the Corporate Sustainability Reporting Directive. It stems from the SME relief package of the European Commission, and EFRAG has been tasked to develop it as a simplified tool to support better access to sustainable finance and also to help companies to start their journey in the sustainability transformation. This means that it is not legally binding, but we expect companies to voluntarily adopt it in order to accede at the benefits expected from the use of this reporting. It's a proportionate tool. It has been built starting from a white sheet of paper, starting from a logic of thinking small first. The scope also includes micro undertakings. I will now lead you through our methodological approach and the process that we used to build this standard. We have started from a dialogue with all the relevant stakeholders here, starting from the small, medium enterprises and their representatives, but also the users. The users here are the banks when they grant a loan, the investors, and also the corporates, large undertakings that due to their own necessity of data to manage sustainability profiles of their supply chains or to respond to their own reporting obligation, they need data from the companies. And we put together a number of questionnaires which cover 26,000 SMEs, 700 banks, and 450 corporates. These are all the possible questionnaires, real cases of questionnaires that we could identify almost 2 years ago when we started the work. We also paid attention to a conceptual consistency with the concepts in the rest of the ESRS literature, namely the definition of impacts and the sustainability issues that need to be covered, but also looking at those specific data points where large undertakings reporting under ESRS may need to collect information about their value chain. They are not so many, those data points, but it's important that this tool, the voluntary standard of SMEs, also helps to respond to a good part of those questions. We tested an hypothesis, which was to use the SFDR principal adverse indicator, despite the fact that they have been developed to serve the investors' needs. We tested with the corporates their suitability to become a sort of backbone of ESG information for SMEs, and the result of the consultation was positive in that respect. In our process, we have consulted practitioners from all the different stakeholder groups which are members of our ESME community. We made a number of outreaches and workshops with SMEs and associations all over Europe. We made a benchmarking exercise with other initiatives of standardization that exist, such as the questionnaires that I mentioned, but also the German Sustainability Code, the Nordic Sustainability Code, the CDP reporting standard, disclosure for SMEs, and also to a predecessor document that was prepared by experts working in the voluntary project task force of EFRAG in 2020-2021. The TAG and the board, as for our due process, had a number of public discussions, and this led ultimately to deliver to the public the exposure draft in January 2024. And on the basis of the exposure draft, we got extensive feedback in our consultation, which was composed by a survey online, a field test, and a number of comment letters. We had 300 and more feedbacks, including surveys and public comment letters, and then we had 164 participants to the field test, which notably included also important rating agencies and platforms that allowed us to effectively test the functionalities of this standard as a possible substitute of the questionnaires that are currently used. We got very good feedback in this consultation, which was the basis for an extensive work that we performed by the summer, because the consultation ended at the end of May. 1 month to analyze. In June, we started to prepare the discussions, and then from July to September, we had a redrafting of the document. We also had workshops with SMEs associations and with users, so with the banks, to test the revised draft in order to check that the simplifications that we were conceiving were not disrupting the coverage of their the information that they need. We finally got the approval by the TAG in October and by the board in November. We also prepared a cost-benefit analysis which accompanies this standard, and it has been developed in 2 steps. So first with a number of interviews on the basis of the exposure draft, and then refreshing the analysis on the basis of the final version. And we just released the package to the European Commission on the 17th of December. What we learned in particular in terms of content during the public consultation. There was a general support for the structure of the standard, the language, and its modularity. The fact that the different module, basic, business partners, and narrative were able to capture the diversified scope of this standard. But we also learned that the VSME, in terms of standardization in this document, is the starting point, but it's per se alone not able to deliver all the benefits that will ultimately trigger the incentive for the SMEs to actually use the standard and start their reporting. What needs also to happen is the availability of tools and databases, reliable and updated, but also accessible and understanding to SMEs in order to facilitate their reporting. We also learned that it would be necessary, at least at country level, but also coordinated at the European level, to have online platforms where SMEs can populate the templates, and then clicking a button, they can make these information structured according to VSME available to a plurality of current and potential business counterparts. And this would create then the incentive that is necessary for the companies to really be compelled and incur the costs of the reporting. Now, all of this needs to happen, and we are confident that it will be the case, and EFRAG will facilitate part of this work with a number of initiatives starting from 2025. But we also learned that we will need to accompany this standard with additional education and guide to support the preparation with concrete illustrations of the different disclosures. And that's what we are committed to do. We also run workshops with the banks and the SME associations on the basis of the intermediate versions after the consultation. One of the elements that we simplified was the elimination of the narrative or PAT, policies, actions and targets module, which has been eliminated as the relevant disclosures have been pushed down either in the basic module or in the comprehensive module. The message there was that narrative disclosure is not that easy for these categories of company. Also that users would very much more appreciate a semi-narrative yes or no structure. And that's what we are going to what we have in the standard already and what we are going to further supplement with examples in the next year. Another simplification is that we have eliminated the materiality principle in order to embrace an if applicable principle whenever it was possible. So now the disclosures are framed in a way that if a company has a certain policy, practice, etc., then it discloses. If the company operates in certain sectors and therefore is exposed to a certain number of issues, it needs to disclose, and so on and so forth. So they are conditional, but there is no materiality analysis because we understood it's too complex for these types of companies to perform. During the consultation, we also had identified a number of potential additional data points requested by banks, but subsequent interactions with them have shown that there were some data that were really essential, others that could be dropped, at least at this stage. I already mentioned the additional application that we are going to, the additional disclosure and the additional educational material and guide that we are going to issue, templates, mock-up disclosures, list of possible actions and policies to cover the various sustainability issues, examples of climate transition plans for these, very simplified for these companies, impacts of workers in the value chain, guidance on pollutants, and then also linking this standard to the ISO guidance. We also got this message that guide at the sector level would be needed, and we are going to explore the synergies of producing these in conjunction with the work that we are going to perform on sector guidance. An overview of the final standard itself. We started from a standard that you see on the left of this slide, the exposure draft, with 3 different modules. The basic module, which is the entry level for the non-listed micro undertakings. So it's the target for micro and the entry level for non-listed SMEs, which is highly simplified in terms of language. And then we had next to it, for the most mature companies, other 2 modules, a narrative module for policies, actions and targets, and 1 business partners module with more extensive disclosure covering the various issues. We have simplified it, we have eliminated the narrative module, and now we have the basic, which is 11 disclosures, which cover also with a semi-narrative yes-no approach, also the policies, actions, and targets, without materiality, with an if applicable concept. It is still the target for micro undertakings, and it's the entry level for the non-listed SMEs. Next to it, for the more mature companies, we have the comprehensive module, which it has to be seen as incremental to the basic, because the business counterparts, being them banks or corporates, they will need both the information of the corporate and the information of the comprehensive. So depending on the type of counterparts, or the type of demands that the company receives, we would expect that they go over and above the basic to also use the comprehensive when this is required by their counterparts. So these basic plus comprehensive have been designed in order to be able to satisfy a substantial part of the questionnaires. We cannot exclude that additional requests, of course, can be asked. I don't think that there is any standard that can avoid that will happen. And we know already that there may be elements at sector level that may trigger additional disclosures, also in line with the consideration that is already in the comprehensive module, that whenever needed in certain sectors, entity-specific considerations such as for scope 3 may be needed. And the comprehensive module has 9 disclosures, so in total the basic plus the comprehensive is 20 disclosures in total, which is very proportionate, we consider. Thanks a lot for your attention. You can find the rest of the content by the next speaker. Thank you.
I'm going to lead you now through the main underlying principle of this standard. This part on the underlying principle is the initial cross-cutting section of the VSME. The first principle I would like to elaborate on is the inclusion of the additional information not covered by the VSME. Depending on the type of activities carried out by the undertaking, the inclusion of additional information that can be a metric of narrative disclosure not covered by the VSME is appropriate in order to disclose sustainability issues that are common in the undertaking sector or that are specific to the undertaking. This includes, for example, the consideration of information of scope 3 GHG emission, which is also then indicated more precisely in the comprehensive module. And this principle also states that the Appendix B provides a list of possible sustainability issues. Another important element is the comparative information. The undertaking shall report comparative information in respect of the previous year, except for metrics disclosed for the first time. And the undertaking shall report comparative information from the second year of reporting. The if applicable principles is quite central to the standard and replaces in a way the materiality analysis. Certain disclosure only apply to specific circumstances, and in particular the instructions provided in each disclosure specify the circumstances that trigger the disclosure and the information that is to be reported only if it is considered applicable by the undertaking. When one of these disclosures is omitted, it is assumed to be not applicable. Another important element is the inclusion of subsidiaries in the reporting data. So if the undertaking is a parent company of a group, it is recommended that it prepares the sustainability report on a consolidated basis, including information from its subsidiaries. If the parent undertaking has prepared the sustainability report on a consolidated basis, including information from the subsidiary undertakings are exempted from reporting. Coming to the timing and location of the sustainability report, it is important that and this has been clarified following various discussion and the public consultation as well, that if the sustainability report is prepared to meet the needs of large undertakings or lenders that require an update annually, it shall be prepared annually. If the undertaking prepares the financial statement, it shall be prepared with a period of time that is consistent with the preparation of the financial statement. If specific data points did not change from the previous reporting year, the undertaking shall either disclose the information provided for that specific data point from the previous year or indicate that no changes have occurred. For classified and sensitive information, it has been also clarified that when the provision of the disclosure in the VSME requires disclosing classified or sensitive information, the undertaking may omit such information. If the undertaking decides to omit such information, it shall state that this is the case under the disclosure B1. This was perceived as particularly important, in particular for the smaller SME. Finally, the coherence and linkages with disclosures in financial statement. If the undertaking also prepares financial statements, the information provided in its sustainability report following the VSME shall A, be coherent with what is reported in a financial statement for the same period, and B, be presented in a way that facilitates the understanding of the linkages that exist with the information reported in financial statement, for example, by using appropriate cross-references. Following the principal section, the VSME continues on to the two modules that compose the standard, the basic module and the comprehensive module. For the basic module, that as a reminder is the entry level for all undertaking and the target for the micro, the following 11 disclosures are included. The first one is B1, basis for preparation, where the undertaking indicates which of the modules, if only one or both, is applying, and it also indicates if it applies a combination of basic plus only certain disclosure from the comprehensive, which are requested by the business partners. Then the disclosure B2 is about the practices, policies, and future initiatives for transitioning towards a more sustainable economy. It is disclosed as a yes and no drop-down menu. The B3 is about the energy and greenhouse gas emission, B4 pollution of air, water, and soil, B5 biodiversity, B6 water, B7 resource use, circular economy, and waste management, B8 workforce general characteristics, B9 workforce health and safety, B10 workforce remuneration, collective bargaining, and training. Final is the B11 with convictions and fines for corruption and bribery. The second module is a comprehensive module that is to be used on top of the basic module. So the basic module is the precondition to use the comprehensive to answer in a more comprehensive manner to the requests of the business partner. This includes the 9 disclosures follow the C1, strategy, business model, and sustainability-related initiatives, the C2, with the description of the practices, policies, and future initiatives for transitioning towards a more sustainable economy, as a semi-narrative disclosure in the form of the table that is a continuation of the disclosure B2. The C3, with the GHG reduction and climate transition, G4, C4, climate risks, C5, additional general workforce characteristics, C6, with the additional own workforce metric on human rights policies and processes, C7, incidents related to severe human rights cases, C8, revenues from certain sectors and exclusion from EU reference benchmarks, and C9, gender diversity ratio in governance bodies.